It is that time, guys. Earnings season is officially back, and I could not be more pumped about it. Cheers, by the way, guys. I appreciate you all for tuning in. We have 7 companies, 7 stocks to break down in this video, all of which are reporting earnings this week. We're going to go over the stock charts, what I'm looking to do, earnings and revenue estimates, the whole 9 yards. So hit the like button. Do not forget to subscribe and get up to 30 stocks for a moo. Open up your account using that link down below. Deposit at least $100. You get 5 free stocks. Deposit at least $2,000. You get 25 more stocks, guys. And overall, for now, your uninvested cash will earn up to 8.1%, which is unbelievable, guys, and the clock is ticking. Use that link down below or simply go to stasurfest.com/moo. And with that being said, cheers, let's get into it. So we're heading into this week, ladies and gentlemen, after a very strong Friday for the stock market where we had the S&P up 1%, NASDAQ 100 up 1.7%, Russell up 0.4%, and the Dow went up over 0.75%. So we had a big week last week for stocks, and Friday was great. So we're heading into this week looking pretty good on the charts. SPY's breaking out of both moving averages on the 4-hour chart here. We're actually breaking out of this trend line as well and getting close to that $600 alert I have, guys, which is roughly the high from about 2 weeks ago, which if we're able to get out of 600 on SPY, I think we're going a lot higher. So SPY looks bullish heading into this week, guys. QQQ does as well. Pretty much it looks the same on the charts as SPY. We're breaking out of both moving averages here on the 4-hour chart, breaking out of this trend line as well. And now we're trading pretty much at a 2-week high, but I think, in my opinion, QQQ will fully break out if it's able to take out 525. So I'll set my alert now at 525. Mark is at or above, and, we'll see where it goes from there. We're getting there, though, guys. We're getting there. That's the point here. SPY and QQQ, they are almost about to explode, right? They're on the verge of that. We're seeing the signs of it. We had a great week last week. Let's see if we can follow that up with another big week this week, which, by the way, almost forgot to mention, tomorrow, Monday, the stock market is closed. Not only is it Martin Luther King Jr. Day, but we're also getting President Trump back in office. So it's going to be a big day tomorrow. For the country, just overall, right? Stock market aside, and we'll see how Tuesday opens up. I'm very excited to see how Tuesday ends up opening up. It's going to be interesting, right, guys? So keep that in mind. And with that being said, let's just get into these stocks. Let's break down what stocks that you need to watch. I'm watching these closely, obviously, and we'll break down the estimates for revenue, EPS, the whole 9 yards. So Netflix is number 1, which I have covered the charts in recent videos here, guys, so I don't want to go too deep into the charts per se on Netflix right now, but, I mean, what is there really to break down? I mean, the stock has been uptrending for months. And recently, in the last about month and a half, we're down $100 a share. So we are down a good chunk here, about 10%, slightly in correction territory. And the uptrend's holding, guys. It's holding on Netflix. And if they crush earnings, in my opinion, I have no doubt in my mind we'll get a nice rebound on Netflix. My alert's already set at 875. So they're on Tuesday, guys, I believe after the bell. We're getting Netflix's earnings. And again, we're down about 10%, slight correction territory here. We're trying to break back over both moving averages on the 4-hour chart, which if we're able to do that, I think this thing could really fly. And honestly, I think Netflix will be on $1,000 stock pretty soon, and they'll probably do a stock split when it hits over 1,000. I don't know. That's just my prediction. And when it comes to their numbers, EPS estimate is $4 for this quarter versus $2.11 from last year. So EPS, guys, is pretty much doubling up year over year on revenue of $10.11 billion versus $8.83 billion from last year. So revenue is expected to grow about 14% year over year. Not bad, guys. Not bad, man. Netflix continues to grow. The chart looks good. They're the king in the streaming space by far, in my opinion. There's no one's going to take that throne anytime soon. And, I like the company. I don't own the stock right now, but if it breaks 875, I'll probably catch it as a trade. We'll see how it goes. So we also have SCHW this week, which is Charles Schwab. You guys, I'm sure, know Charles Schwab. So they're reporting earnings, I think, on Tuesday as well. Let me double check that, though. Yeah, Tuesday in the morning, the 21st. And this stock, I mean, it's trying to rebound. You guys see it on the charts here. We went from 84.20 all the way down to $71 a share, about a 15% drop. And now we're recovering. We're back to the mid-high 70s. We're up a good chunk off the recent low, about 7-8%. And we're trying to break back over the 180 moving average, which this could really go one of two ways. We do have a head and shoulders here potentially forming. You guys see it right here, right? Left shoulder, head, right shoulder. But we're pretty much breaking out of the neckline. I mean, the head and shoulders might be out the window here pretty soon, especially if we're able to get out of $78 into the 80s again on the stock. I think this would be a nice runner from there. So SCHW is projected to report earnings per share of 91 cents versus 68 cents from last year on revenue of $5.2 billion. That's the average estimate versus $4.46 billion from last year. That would be up 17%, give or take a little bit. Year over year there. Not bad, guys. But for me, I'd love to see it break $78 and preferably into the 80s before I do consider this as a trade. So I'm going to set my alert at $78. Keep your eyes peeled on Tuesday morning, guys. Once the markets open back up, this company will report earnings. They're going to report earnings in the pre-market, so keep your eyes peeled on SCHW and Interactive Brokers, guys. IBKR is the ticker. This one looks interesting on the charts, doesn't it? I mean, we do have a bit of an ascending triangle here. Do you guys see that? We have higher lows being made into this resistance at $193, $194 dollars per share into earnings, which I think are on Wednesday. No, they're not. They're on the 21st. So all these so far are on Tuesday. And IBKR is looking to report $1.86 earnings per share versus $1.54 or 52, from last year on revenue of $1.37 billion versus $1.15 billion from last year. So expect revenue to be up around 19-20% in that ballpark year over year. And I'm going to set my alert here, guys. Let's keep it simple. I'm going to put it at $195 per share. Mark is at or above. And yeah, let's see if this ascending triangle plays out on IBKR. It looks pretty bullish here, guys. If we break 195, this could be taken off a lot further. So let's continue here, guys. The next stock on the list. And by the way, if you're still here, I'm assuming a good amount of you are still here, make sure to hit the like button if you haven't done that already, and make sure to subscribe here on YouTube as well. We're almost at 50,000 subs, which is one heck of a milestone, guys. I appreciate you guys as always, but I think 60% of you watch the videos, but you're not subscribing. So if that's you, make sure to subscribe. Cheers to that. I appreciate you all as always. So we have a lot of airlines reporting earnings this week. United Airlines, which is trading at a high on this 4-hour chart. And I just realized, oh my gosh, guys, UAL was $37 back in August, and now we're over $100. oh my God, this stock's up almost 200%. I didn't even realize how much these airlines are up. We have a couple more to talk about, so make sure you guys stick on throughout here. But UAL, man, they're going to have to report great numbers to keep this momentum up. They're on Wednesday, looks like here in the morning. No, right? After the bell on Wednesday, you guys, better watch out for UAL. And clearly, the stock is uptrending. I mean, no doubt about it. We're at a fresh high here. This is probably an all-time high, right? It's got to be, right? Yeah, all-time high on UAL. Now we're actually, with this move past 100, funny enough, we're past, finally, I just realized, oh man, we're past the pre-pandemic levels. Finally, it took what, 5 years, 6 years? Oh my God, UAL was at $95 before the pandemic, October 2019. It tanked all the way to $17, right? You guys remember Buffett was selling airlines back then. A lot of people thought airlines were screwed, right? They're going to consolidate. Oh my God, a lot are going to go bankrupt. But it proved to be a decent buy if you had some risk appetite, right? Now, the stock it's up to 110 from 17, 20 bucks to now 110. And we're finally past those pre-pandemic levels. Shout out to UAL for that, man. Unreal. But at this point, I don't know. How much higher could the earnings send the stock? I don't know. Earnings per share estimate, $3.03 versus $2 from last year on revenue of $14.34 billion versus $13.63 billion from last year, up around, let's see here, 5.2% projected year over year here, guys. And I'm a little bit skeptical about this one, considering how much it's gone up already, but we'll see. Maybe earnings push it even higher. So UAL, keep your eyes on it. We also have AAL, American Airlines, another one that's crushing it here, guys, pushing $18.50, $19 after being at $9 a share back in early August. And is this one past the pandemic highs yet? Oh my gosh, not even close. Oh wow, I didn't realize. AAL, man, wow, was at $60 a share before the pandemic. And we're nowhere near that. We're at 18. We're still down big time, about 70%. And who knows if that ever recovers back there. It might never get back there, guys. It might not. Who knows? AAL EPS is projected at 66 cents versus 29 cents from last year on revenue of $13.42 billion versus $13.06 billion from last year, up 2.7% year over year. Pretty flat. Not too impressive there. And we do have a little bit of a bearish divergence on AAL. I'm not loving that here on the 4-hour chart. Maybe on UAL as well. Let me double check that. Yeah, I guess a little bit of bearish divergence on UAL as well. We'll keep an eye on that, guys. We'll monitor it and see how it plays out. But that's a quick rundown here on those two airline stocks. And before we go over another one, make sure you guys, first of all, check out the Patreon if you guys want to keep up with what I'm doing, what I'm doing in my portfolio every week. There's a little fee for that. That's linked down below if you guys are interested. But what's free is the email list. Every Monday, I'm sending out my top 3 stocks right to your email. And did I say it's free? It's free, guys. Right to your email. So use that link in the description box, put your first name, your email address, and boom, you're locked in there. So stock 6, ALK, another airline stock. But this one, guys, Alaska Air Group, is actually growing very nicely. And I think this is kind of a more slept-on airline in terms of the numbers, the growth, the stock, I think is decent. So ALK EPS is projected at 47 cents versus 30 cents from last year on revenue of $3.5 billion, so a lot less than UAL. AAL, it's a smaller player, but that's compared, the 3.5 is compared to the 2.55 bill from last year. So ALK's revenue is projected to grow 37% year over year. Very impressive. And this stock, I mean, clearly, all the airlines have been performing the last couple of months. and so has ALK. It's pretty much doubled up in the last 6 months. And the stock here is, let's see, are we getting past those pandemic highs? We're pretty much there, or pre-pandemic highs, rather. Well, I guess we hit $100 back in 2017. Still a ways to go to get there. But in 2019, early 2020, we were at about $65, $68 a share. And that's where we're at now, guys. That's where we're at now. So I'm not looking to buy any of these airline stocks for now, guys. But obviously, I'm keeping an eye on them because they're reporting earnings, and we have to cover them here on the channel. So you guys keep an eye on them, kind of, what I do here on YouTube, talk about stocks, right, to keep an eye on every single week. It doesn't mean I'm buying all of them, right? It just means that we're watching them for the week. So, yeah, airlines, it's going to be a big week for them. ALK, AAL, and UAL. Hopefully I'm not missing any there. And Johnson & Johnson, not an airline, but still a company that you need to watch for this week, as the stock, man, it's the same price I remember it was at years ago, right? I mean, this stock hasn't done anything. 145. I feel like that's where J&J was when I started my YouTube channel, literally, 7 years ago. Let me double check that. I'm pretty positive because I remember, man, I used to make videos here on the channel like top dividend stocks for this month or top dividend stocks for this year, right? And I remember J&J would be in that, in those videos, and it was at $145. Yeah, literally back in 2017, 18, when I started this channel, guys, J&J was at $140 a share, man, and we're still there. Talk about crap performance. Talk about just garbage performance out of a company that you'd think would do very well, right? Which is why I don't do those, maybe once in a while I'll do a dividend video, but I don't invest solely in dividend stocks. When I first started investing in the stock market like a decade ago, I would be like, oh, let me have a dividend portfolio, let me have a REIT portfolio, let me have an ETF portfolio. Nowadays, it's much more simple. I don't really do all these different portfolios, but back then I would have a dividend portfolio, and it's like, what am I doing? I'm 21 years old. I'm 20 years old. Why do I have a dividend portfolio, right? It just doesn't make sense. And I'm so glad I ditched that because, again, J&J is at the same price it was 8 years ago. I mean, it just doesn't make sense, right? I'm not dogging the company. If you want a dividend portfolio, if you want income, it's a great stock for that. But if you're younger, you want growth, but you're also in your head like, oh, maybe I want dividend income too. It just doesn't make sense. If you're young, forget dividend income. It's just not tax efficient. It doesn't make sense. Invest in growth companies. That's, in my opinion, what you should do if you're young. Either way, whatever. J&J, I don't know how we got on that side tangent. Either way, J&J, same price it was 8 years ago. That's how we got on the side tangent, because I remembered that. And the stock actually might be gearing up for a move. Maybe. It's starting to break out of the moving averages here on the 4-hour chart, heading into earnings here on Wednesday, I think, right? Yeah, Wednesday in the morning. Maybe something pushes it higher. Maybe earnings push it higher. I sure hope so for the sake of J&J investors. It must be frustrating at this point. But EPS estimate is $2.05 for J&J versus $2.29 from last year. Not good, right? Down year over year. And revenue estimate is $22.45 billion versus $21.39 billion from last year. That is up 5% year over year. Not much there. So, yeah, I mean, I'm not the biggest fan of this company. And I think a lot of people get caught in that dividend portfolio trap, especially at a young age. I mean, you see people talking about these dividend stocks. Oh, my God, make this dividend portfolio. You can live off of cash flow in 20 years. But it's like, man, invest in growth stocks. Don't pay taxes on your dividends, right? If you invest in growth stocks, you're not giving away taxes, because you're getting dividend income. So you're keeping all your money invested in growth stocks. And then eventually when your portfolio grows, right, Then you can be like, all right, maybe I'll put some of this money in dividend stocks when your portfolio grows even further, right? I mean, a lot of people get in that dividend stock trap, and there's so many names that I could just name that are at the same price they were at like 5 to 10 years ago. It's nuts. Like J&J is one of them. 3M's another one, right? I mean, don't even get me started. 3M, oh God, what a garbage stock to own, in my humble opinion. But there's so many more. I'm going on a rant now. We're going to end the video here. I'm going to cover this maybe in another video, but it's a big mistake. Don't fall into that dividend portfolio mistake, especially if you're young. So what do you guys think? Let me know your thoughts in the comments. Hit the like button. Do not forget to subscribe here on YouTube and get your stocks from Moomoo. It's free money, guys. Open up your account, deposit at least $100. You get 5 stocks. Deposit at least $2,000. You get 25 more stocks, guys. Unreal. And your uninvested cash for now will earn up to 8.1%. APY, which, guys, it's a no-brainer. So check out the link down below or simply go to stocksurfest.com/Moomoo. And with that being said, cheers. I'll catch you guys in the next video. Don't fall for that dividend trap.